But if we're buying a tenanted property, it's much easier to command and negotiate a lower purchase price, because obviously a tenanted property is not going to appeal to an owner-occupiers. And owner-occupiers count for the largest share of buyers in the market. So if we're excluding them because they don't want a tenanted property, then that vendor, that seller, is only really appealing to perhaps 5% of the market that are open to buying property with a tenant in situ. So for me, I've had really good success buying tenanted property. Often 35% discount to market value, simply because there's a tenant in there. Now, this strategy gets even better when the tenant is paying a low rent. And you may think, Marco, why on earth is that? Well, exactly that, because it scares off the majority of investors. Imagine only 5% of people are investors, and then imagine 95% of those 5% don't want to buy that property because A, they don't like tenanted property, and B, the rents are too low. If you can be that, 1 in 1,000 that's willing to do that, then all of a sudden, whatever offer you submit, more or less has to be accepted, providing the seller wants to part with their property. And then, we can look at passing on slow and fair rent increases along the way. Or if the tenant vacates, well, guess what? We can go to market level rent straight away. Now, we often come across tenanted properties that we share on our email list. So if you're looking for good, solid property opportunities to buy excellent investment properties, sign up to our email list.